Master this one skill. Every trade you take will never be the same. The swordsmith's secret. In feudal Japan, the master swordsmith did not begin with steel. He began with fire. Weeks before a single piece of metal was touched, he studied the fire, its temperature, its behavior at different oxygen levels, the specific color of the flame that indicated the precise moment when steel was ready to be worked. He understood fire not as a tool but as a language that told him at every moment what the steel was doing and what it needed next. The apprentices who arrived at the forge saw the fire as obvious, hot, present, a means to an end. The master saw something entirely different. He saw structure, he saw information, he saw the precise real-time communication of a system that was telling him everything he needed to know about the material he was working with, if only he knew how to read it. Most apprentices never learned to read the fire the way the master did. They followed the visible steps, heat the steel, hammer it, fold it, repeat, and produced functional swords. Adequate, serviceable, indistinguishable from the work of 100 other competent craftsmen. The master's swords were different. Not because he followed different steps, because he could read what the fire was telling him at every moment, and respond to that information with a precision that no set of rules could encode and no instruction manual could capture. The skill was not swordsmanship, it was reading. Reading the fire, reading the steel, reading the moment. In trading, there is one skill that functions exactly like the master swordsmith's ability to read the fire. It is not a strategy, it is not an indicator, it is not a system. It is the ability to read price action. Truly read it, the way the master read the fire, and understand at every moment exactly what the market is doing and what it needs next. Master this skill, and you will never trade the same again. What price action reading actually is. Most traders believe they are reading price action. They are reading indicators derived from price action. Moving averages, RSI, MACD, Bollinger Bands. Each of these tools takes the raw language of the market, the actual, unmediated communication of buyers and sellers through price, and translates it into a simplified, smooth, delayed version designed to be easier to act on. The translation is useful, but it is not the language. The apprentice swordsmith who relies on a temperature gauge is getting information about the fire, but he is not reading the fire. He is reading an instrument that measures one aspect of the fire and presents that measurement as a number. The master does not need the gauge. He reads the fire directly, the color, the sound, the behavior of the steel as it heats. He is getting more information, faster, with greater nuance than any instrument can provide. True price action reading is the direct reading of price, without the filter of derived indicators, not because indicators are useless, but because the filter always loses some information, and the information that indicators lose is often exactly the information that matters most. What does direct price reading look like? It looks like understanding what each candle is telling you, not just its direction, but the story of the battle between buyers and sellers that produced it. The size of the body relative to the wicks, the position of the close relative to the range, the relationship between this candle and the candles that preceded it. It looks like understanding what sequences of candles are telling you, not just the pattern name, but the narrative arc. Are buyers getting stronger or weaker? Are sellers exhausting themselves or gaining momentum? Is the market approaching a structural level with conviction or with hesitation? It looks like understanding what the overall structural picture is telling you, the sequence of highs and lows that defines the trend, the significant levels where institutional memory is concentrated, the phase of the market cycle that current price is expressing. This is the skill, not the ability to identify a hammer candle or a bullish engulfing pattern, the ability to read the complete real-time communication of the market, to hear the fire, not just measure its temperature. Why this skill is the foundation of everything. Here is a statement that will initially seem like an overreach. Every other trading skill you will ever develop rests on price action reading. Risk management depends on it. If you cannot read price action, you cannot identify logical stop-loss levels, levels that represent genuine structural failure rather than arbitrary pip distances from entry. Your stops will be placed mechanically at levels that have no relationship to what the market is actually doing. And mechanical stops, disconnected from market structure, will be hit by normal price fluctuation with far greater frequency than structurally placed stops ever would. Entry timing depends on it. If you cannot read price action, you cannot identify the specific moment when a setup is complete and the trade is ready. You enter too early, before the signal has confirmed, and are stopped out by the volatility that precedes the move. Or you enter too late, after the confirmation has become obvious to everyone, and catch only the tail of the move at a dramatically worse risk-reward ratio. Position management depends on it. If you cannot read price action during a live trade, you cannot distinguish between a normal, temporary pullback that will resolve in your favor and a genuine structural reversal that requires immediate exit. You exit winning trades too early because ordinary retracements look threatening. You hold losing trades too long because the market's clear communication of structural failure is invisible to you. Strategy selection depends on it. If you cannot read price action, you cannot identify which market condition is currently active, trending, ranging, transitioning, and therefore cannot select the appropriate strategy for current conditions. You apply trend-following strategies in ranging markets. You fade moves in trending markets. Your strategy is perpetually mismatched with the market environment because you cannot read what the market is telling you about itself. Every trading skill ultimately reduces to the ability to read what the market is communicating through price. Master the reading. Everything else follows. The 5 dimensions of price action reading. Price action communicates on 5 distinct dimensions simultaneously. The master reader holds all 5 in awareness at every moment, not consciously processing each one separately, but integrating all 5 into a unified understanding of what the market is doing. Here is each dimension, explained with the precision that mastery requires. Dimension 1, the individual candle. The individual candle is the atom of price action, the smallest unit of meaningful market communication. Every candle tells a story. The opening price is where the market began the period. The high is the furthest the buyers managed to push price. The low is the furthest the sellers managed to push price. The closing price is the outcome of the entire period's battle between buyers and sellers. The final verdict of who won. The relationship between these 4 data points reveals the quality and intensity of the battle. A large-bodied candle that closes near its high with a minimal lower wick tells a specific story. Buyers were in complete control throughout the period. Sellers tried to push price lower. The wick shows their attempt, but were overwhelmed. Price closed near the high, where buyers dominated. A candle with a tiny body positioned in the middle of a long range, with equal upper and lower wicks, tells a completely different story. Buyers and sellers were exactly evenly matched. Every advance by buyers was neutralized by sellers. Every decline by sellers was reversed by buyers. The period ended in complete stalemate. A candle with a small body near the top and a very long lower wick, the hammer, tells the story of a battle that sellers appeared to be winning, then lost decisively. They pushed price far lower during the period. Then buyers overwhelmed them, not just stopping the decline but reversing it completely, pushing price all the way back to close near where it opened. Each of these stories has implications for what comes next, not certainties, probabilities. The master price reader understands which stories indicate continuing momentum, which indicate exhaustion, and which indicate reversal, and weights their decisions accordingly. Dimension 2, the candle sequence. No candle exists in isolation. Every candle is one episode in a continuing narrative, and the narrative read correctly reveals information that no individual candle can provide. 3 consecutive large-bodied bullish candles, each closing near its high, each opening above the previous close. This sequence tells a specific story: strong, sustained, institutional-grade buying momentum. Not retail excitement, not algorithmic noise. The kind of sustained directional pressure that comes from significant capital deployed with conviction. 5 small-bodied candles with overlapping ranges, following a strong directional move. This sequence tells a different story. The momentum has paused. Neither side is dominating. The market is consolidating, potentially gathering energy for the next move. A sequence of candles where each upward push is smaller than the previous one, where the highs are still advancing but the advances are getting progressively smaller, tells the story of fading momentum. Buyers are still present, but their strength is diminishing. The trend is running out of fuel. The master price reader watches these sequences the way a musician watches a melody, not note by note, but as a flowing structure that has direction, momentum, and inevitability. Dimension 3, the structural context. Individual candles and sequences of candles exist within a structural context, the pattern of highs and lows that defines the current market phase. This structural context is the most important dimension of price action reading. Without it, even perfectly accurate candle reading produces incorrect conclusions. A hammer candle is a bullish signal in a downtrend pullback that has reached significant support. The same hammer candle in the middle of a ranging market, with no significant structural level nearby, is meaningless noise. The structural context tells you which candle stories are meaningful and which are irrelevant. It tells you which levels the market recognizes and which it ignores. It tells you the direction in which the market's current energy is flowing, and therefore the direction in which candle signals carry maximum weight. Reading structural context means tracking the sequence of significant swing highs and swing lows. Not every candle's high and low, but the significant ones, the points at which price has reversed meaningfully. Higher highs and higher lows, uptrend. Lower highs and lower lows, downtrend. Equal or inconsistent sequence, ranging. Within this structure, the significant levels, the swing highs that have become support after being broken, the swing lows that have been tested multiple times, the areas where multiple prior reversals cluster, are the locations where the market's structural memory is concentrated. These are the levels where candle signals carry maximum information. Dimension 4, the momentum characteristic. Momentum is the speed and intensity of price movement, not the direction, but the energy with which price moves in that direction. 2 uptrends can be visually identical in their structure, higher highs and higher lows in both, but completely different in their momentum characteristics. One advances rapidly with large candles on expanding volume, pushing aggressively to new highs before pulling back only briefly. The other crawls forward with small candles on declining volume, making marginal new highs before pulling back significantly. Same structure, completely different momentum, and completely different implications for how you trade them. The high momentum uptrend is institutionally driven. Capital is flowing into this instrument with conviction. Pullbacks within this trend will be shallower than in a low momentum trend, because buyers are aggressive and waiting for any opportunity to add. Entries at the first pullback to structural support will be taken quickly and aggressively by waiting buyers. The low momentum uptrend is potentially exhausting. Each new high costs more effort for less advance. The buyers are still present but are weakening. Pullbacks within this trend may be deeper and longer because the buyers who would normally step in quickly are less aggressive. And the risk of the low momentum trend transitioning to a range or a reversal is substantially higher than in the high momentum trend. Reading momentum requires watching not just where price goes, but how it gets there, the size of the candles, the relationship between upward and downward candles within the trend, and the volume signature that accompanies each move. Dimension 5, the key level behavior. The final dimension of price action reading is the most nuanced, and the one that most clearly separates the master reader from the competent one. When price approaches a significant structural level, a level with multiple prior interactions, with documented institutional memory, the behavior of price at that level tells a specific story that no other dimension of price reading can tell. Does price approach the level aggressively with large candles, high volume, clear directional intention, and then reverse decisively with equal or greater energy? This is a strong level defended by institutional capital. The reversal is likely to be sustained. Does price approach the level hesitantly with small candles, declining volume, reduced energy, and then pause indecisively? This is a potentially weakening level. The market is testing it without conviction. A break is possible. Wait for resolution before trading in either direction. Does price break through the level decisively with a large candle close beyond the level on above average volume, and then return to test the level from the other side? This is a level that has changed character, former resistance now becoming support, or vice versa. The institutional players who defended the level have been overwhelmed. A new structural reality has been established. Each of these behaviors at key levels tells the master price reader something specific and actionable about the quality of the structural level and the probability of different outcomes. How to develop the skill, the practice that builds mastery. The swordsmith did not become a master by reading about fire. He became a master by watching fire. For years, with focused attention, until the language of the fire became as natural as spoken language. Price action reading is developed the same way. Practice 1. The naked chart session. Once per week, every Sunday evening, open 5 instruments on the daily chart with every indicator removed. Nothing on the chart except price candles and the horizontal lines marking significant structural levels. Spend 10 minutes on each chart. Your only task is to describe out loud in complete sentences exactly what you see, not what you think will happen, not whether you would buy or sell. What you see right now in the price action on this chart. The trend is up, higher highs and higher lows visible over the past 3 months. The most recent impulse was strong. 3 large-bodied candles on what appears to be above average range. The current pullback is on smaller candles, which suggests it is a correction within the trend rather than a reversal. Price is approaching the previous swing high that was broken 2 weeks ago, a potential support zone. No rejection signal yet. Watch for a hammer or bullish engulfing candle at this level. This practice, articulating what you see, forces the level of conscious attention that accelerates skill development faster than passive observation. The act of putting the observation into words reveals gaps in understanding that silent observation never exposes. Practice 2. The post-session candle review. At the end of every trading day, before doing anything else, spend 5 minutes reviewing the daily candle that just closed on every instrument you follow, not analyzing for trades. Reading the candle. What is this candle telling me? Where did it open relative to yesterday's close? How far did price extend in both directions? Where did it close within its range? What does this candle add to the narrative of the past week? Write 3 sentences in your trading journal. The candle's story. What it adds to the sequence. What you will watch for tomorrow. This daily practice builds the narrative continuity that separates the master reader from the intermittent analyst. The master does not look at charts when they are looking for trades. They look at charts every day, maintaining the continuous narrative that allows each new piece of information to be placed in its correct structural context. Practice 3. The historical sequence walk. Take any instrument. Go back 12 months in the daily chart. Starting at the beginning of the 12-month period, cover the right side of the chart with a piece of paper or a digital equivalent. Move the paper 1 candle at a time. After each candle is revealed, describe what you see. The current structural context, the momentum characteristics, the key levels, and what you would be watching for next. Then reveal the next candle. Was the price action consistent with what the previous candle suggested? Was there information in the revealed candle that you could have read from the previous candles? This practice, reading historical price action in real time without knowing the outcome, develops the forward-reading skill that live trading demands. You learn to draw conclusions from what is visible without being influenced by what you already know happened next. Practice 4. The trade debrief. After every trade, win or loss, spend 10 minutes reading the price action that surrounded the trade, not analyzing whether the entry was correct. Reading the price action. What was the candle before entry telling you? What were the candles during the trade telling you? What was the exit candle telling you? Were there candles in the sequence that you did not read correctly at the time, that contained information you missed or misinterpreted? This debrief practice converts every trade into a price action lesson. The market is constantly teaching. The master is constantly learning. The transformation, what mastery actually feels like. The swordsmith who has truly mastered reading the fire does not experience the mastery as a set of rules they are following. They experience it as intuition, an immediate pre-conscious recognition of what the fire is doing and what it needs. This intuition is not mystical. It is the product of thousands of hours of focused, conscious observation that have been integrated into automatic pattern recognition. The conscious mind processed the information long enough and deeply enough that the unconscious mind learned to process it automatically. Price action mastery feels the same way. The trader who has spent thousands of hours reading price action, who has done the naked chart sessions and the daily candle reviews, and the historical sequence walks and the trade debriefs, does not consciously analyze each dimension of price reading. When they open a chart, the analysis is immediate, automatic. The structural context, the momentum characteristics, the key level behavior, all of it is read in a single integrated perception that precedes any conscious thought. This is not the experience of a beginner reading about price action. This is the experience of a master who has internalized the skill at a level that makes its application effortless. And this effortlessness, this smooth, automatic, reliable reading of what the market is communicating, is what makes every subsequent trade fundamentally different from every trade taken before the skill was mastered. Not because the market has changed, because you have. Conclusion: the fire is speaking. The master swordsmith heard the fire, not as background noise, not as a feature of the environment that could be monitored with an instrument and largely ignored, as a living communication, constant, nuanced, informative, and generous with its information to anyone who developed the skill to receive it. The market is speaking to you right now. Every candle on every chart you open is a word in a sentence in a paragraph in a book that has been being written since the first trade was executed in the first liquid market. The book is long, the vocabulary is rich, the grammar is consistent, the same structural rules operating in every market, every time frame, every instrument. Most traders are standing in the library of this book without knowing how to read. They see the shapes of the words. They recognize that some shapes have been given names, hammer, engulfing, doji, and they apply those names. But they are not reading. They are pattern-matching shapes without understanding the language those shapes encode. The skill this article describes is literacy. Not trading literacy, financial markets literacy. The ability to read the actual communication of the market in real time, with the depth and nuance that allows you to trade not from rules or systems or predictions, but from genuine understanding of what is happening and why. Develop this literacy through practice, through the specific daily discipline practices that build real skill rather than surface familiarity. The fire is speaking, learn to hear it, and you will never trade the same again. Drop a comment, open any chart you have right now with no indicators, and describe in one sentence what the price action is telling you. Post it below. Let's read the fire together. The expert in anything was once a beginner. Ellen Hayes.